All right, everyone. In today's episode of Outside the Lines, my guest, Jamie Bell, the legend, is back. We got a jam-packed episode post big tech earnings. We'll be talking about a lot of the stocks in here to fight inflation and the other geopolitical threats that we have going on here. This is going to be a wild episode. Stay tuned. We also get into a lot of the calls that he made in the past. So we're very, very on point. So if you guys like money or interested in making a lot of it, listen to what this guy has to say. All right, guys, let's get into it. Outside the lines. And we're back. We'll get it eventually here, but here we go, folks. Look who's back with us. Our in-house analyst, Jamie Bell. How we doing, my guy?
It's good to be back, Emmett. Man, it's we recorded some episodes early last year, I mean to say, about 4 or 5. Life happens, but we have a lot to catch up on, needless to say.
We're recording here. We're back, man.
February 24th, and unless you're living under a rock, we've had a lot of things in the news, a lot of things happen in the world. So, and not a better time, honestly. But yeah, have a lot of things.
So we recently touched on last couple episodes. We went over like big tech earnings.
With you and talk
to the nitty gritty of what's going on in the market here. So whenever you're ready, man, we can.
No, what are you thinking? First off, so I'll just talk about over the last 6 months. When I talk to people, it's I'm out of stocks, or that's pretty much it. That's what we saw about summer last year is the whole small cap growth complex topped out, and that includes Kathy Wood's suite of ETFs, these SPACs, the Chamath SPACs, stocks that I own got caught, even small quality, right? Pretty much anything that was less than a $20 billion market cap in 2021 got a haircut, at least a 15 to 25% haircut. And if you were a shitco, like some of these SPACs and the Beyond Meats and the DoorDashes of the world, you got a 80% haircut. And if you look at even other stocks like Zoom Communications, and I know you and Tucker touched on Peloton. Peloton, that's about a 70% haircut, right?
But just to cut in here, like if people go back and listen to these episodes, you were hitting the nail on the head with all of these companies. DoorDash, you were a big proponent of sell the shit out of this thing.
Yeah.
And you were on that early.
And yeah, I made a comment about that this time last year that, in my job, I was seeing a lot of these growth managers participate in these IPOs, and I didn't understand what was going on. And it was really crazy, man, how the private market and venture capital, how good they were doing of pushing and running these private companies out and getting crazy valuations. DoorDash is what now 100 and change, and that thing came out at 190. Airbnb, which I think is a pretty quality company, that came out at 170, and we're pretty much still there, right? Hasn't done much, but I think Airbnb is actually a real company that makes money, unlike DoorDash. So, there's going to be opportunities here, right? And then there's some really bad shitcos, the Clover Healths, the Robinhoods. Robinhood came out at 60, and now it's what, like 10 or 11. It's really incredible.
Vlad cannot catch a break, man.
There's value in that network, right? But yeah, we can talk about that in depth a little bit. But yeah, so that's pretty much been the story. The small cap growth, mid cap growth, tech complex, as well as some of these value stocks, like these, whatever the AMCs, the GMEs of the world that were value, and then they got pumped, 800%, and the cult, started forming around it. But then, when things go vertical, that I don't like to see it. I like to see nice up, smooth to the right, and we can look at some charts today, and I can kind of go over
what I like to get into that a little bit. Let's give us a little bit of people who haven't heard you before, listen to you, because I'm just doing my own research. But give us a little bit about your background and kind of what gives you a little bit of the expertise to talk about this situation.
never expertise, man. I mean, some of the smartest people in this business are getting absolutely destroyed right now.
100%.
I worked for a multifamily office in Los Angeles, and I worked in operations and trading for about 3 years. Recently, actually left about, what was it? Last summer. And I'm now kind of made a switch to accounting.
So a big numbers guy came from
yeah,
finance. Yeah, finance
finance.
background.
So it's not crazy. I work at a small firm right now for accounting, and we specialize in gas stations. So it's fun. It's fun stuff.
Exactly, man.
But my investing philosophy and what I've been really a big believer in from the beginning. I started investing my senior year in college. That was in 2016. And I'm not like a Buffett fanboy. But I am a value guy. He's like deep value because I mean, at the end of the day, Berkshire Hathaway is one big insurance company, but I'm not like deep like boomer value. Growth at a reasonable price. That's what I would say I am. And I also, when I was in college, the first thing that interested me was commodities. So I'm a big commodities guy. And we've talked in previous, I own physical metals, silver, gold. Through college, I was always, looking at oil, natural gas. And then I started, you keep going down the line, nickel, iron ore, copper,
the rabbit hole,
right? Yeah. And, you start to put things together, but I love commodities. I love the energy industry. We touched on commodities, but energy will be something we could talk about. But that's kind of like my bag. I'm a value guy, and when it comes to tech, I like to invest in the chip companies. But when it comes to software, I don't own any software companies right now. I don't really plan on owning software here. I like the chips, and that's pretty much on the tech side. But we can talk about like my top 5 positions, top 5 longs, just so people kind of get a gist of how I operate here. But nothing's always great. I take risks, and we can talk and break down all this shit.
Yeah,
You could keep
of
shooting me
course.
questions.
But let's just jump into. You said you pulled up some charts earlier.
Yeah, let's take a look at
like
this.
you said, if you've been living under a rock,
so this is how I work, guys. The first thing we're gonna look at, and people are probably gonna X out. We're gonna look at rates. This is what moves the market here. So back in 2020, when GameStop was ripping 800% and you had all this stuff, I mean, look where the 10-year was. There were no rates in this country, but then all of a sudden, I mean, look at this move here. So if you're wondering why the fuck the NASDAQ is drawn down 20%, here we go, guys. Yeah. I keep it really simple, right? Rates are going higher. And as we all know, the Fed's going to be raising rates. Goldman says, up to 10 times this year. 30-year mortgages are at multi-year highs right now. So if you want to borrow money, you could have done it a year ago at a better price, needless to say. But I mean, look at kind of the overhead resistance here in rates. I mean, the trend has been going down and down and down throughout all the years. I mean, geez, look at this, right?
It's still at like almost record lows. Like,
I mean, so people will see this and like, wow, I mean, a move to 5, a move towards 4 in the 10-year. We have to chop some wood to get there, but it's realistic. But then there's also people that are saying long bonds right now might be one of the best buys in the market. I mean, if you buy 10 years. So the thing with bonds is you want to buy them when rates top out. Because imagine if you bought 10 years back in 2018.
Oh, yeah.
Yielding 3%. Those things are because you could sell these things in the open market. Right. So imagine if you bought bonds here and you started selling them here. I mean, that's a huge profit because people would have paid a lot of money down here for 3% bonds that still have 8 years left of maturity.
Damn.
You see what I mean?
Like, who's doing that though? What kind of person's actually doing that? And so like institutions that are jumping into it, or is it like
you could just buy the TLT?
Fair.
This is an ETF, the 20-year Treasury bond ETF. And the saying was in 2020, the TLT beat the NASDAQ. I mean, look, this thing ripped. I mean, let's say you bought these in 2018. I mean, look at this fucking move here. You went from 112 to 170 in effectively a straight line over what, a 2-year period here. And obviously, now look, as rates are going higher, bonds are becoming less valuable.
Yeah, things start to fall again.
But here we go. I mean, here's the line of the sand. Do you buy long bonds here again? And do we have a move higher in long bonds? But I think rates are going to go higher. But this is big support here for long bonds. People have been talking about like this is like a big turning point here in the bond market. And this is how I look at the bond market. I just treasuries. And people don't know this, but like you can go to treasurydirect.gov and just buy these things. They auction like, in tranches.
Yeah, it's way more accessible than people would really think, to be honest with you.
Yeah, or you could just buy the TLT or the IEF. This is the 10-year treasury ETF. And this thing's getting absolutely fucking destroyed because rates are going higher, right? So if you bought 10, but let's look at the 5-year, right? So in 2018, remember I said if you bought bonds at 3%, I mean, this thing went from 100 to 121 and you're owning treasuries. Right? This isn't a software company here. So there's money to be made in bonds if you can top tick rates. Or even if you could have been here and said, I think rates are going higher, you could have shorted this shit. So there's money to be made in the bond market. And this is where a lot of like the old school, the old school guys.
Yeah, so
like
that's where
dabble
like
in.
the old guard kind of sits there, and that's where they make a lot of their money at. And then meanwhile, us millennials and Gen Zers are getting crushed on TikTok stocks.
Just buying call options. That's I told you that it's not a good strategy. That's not a Jesus, man. Well, the good thing with if you're trading, I started out trading trading these ETFs like back in 2016, 2017. Because here, I mean, your losses are capped to a certain extent. I mean, this shit's not gonna move fucking like crazy on you. And as long as you understand macro, you could really put a position on in these things over like 6 months and let it play out.
Yeah.
And in times of stress, I mean, bonds are always good to own because you get paid, what's this thing? 0.99% right now. So not great. Dividend 0.89%, this dividend yield. So not great, right? But yeah, that's the bond market.
I mean, better than like the normal savings yield you're getting, like 0.01.
I mean, so talking about like yields, and I mentioned this before, the millennial generation, we're like the first generation where we actually entered working age to not experience like an actual savings account or a checking account that pays us interest. I know it's a crazy concept for some of you out there listening, but
it's tough to wrap your head around, man.
I know, yeah. Like 15 years ago, like you could have a checking account and it actually paid you interest, right?
Yeah, now we're talking about it like having money in your checking or savings account is just like it's hurting you.
I mean, yeah, because the Fed has just held rates at 0% over the last decade, and and they've used this excuse that inflation was low enough to hold rates there, but then now the kind of the cat's out of the bag now. So now we got to do something, and it's and that's pretty much the story. Again, I keep it pretty simple. I could really go into all the crazy, the Feds, buying back. They were holding rates at 0% after the financial crisis because we were very low growth here in America. We're low, steady growth. That's kind of how we operate here. But then they decided to print trillions of dollars in the name of COVID, which was fine. They overdid it. They obviously know that they overdid it. And then everyone went out and started buying big screen TVs and fucking clothes and shoes, and
everyone was buying some Louis and like,
oh my god, luxury.
We can barely afford rent, but we're buying luxury goods. Like,
what happened with the consumers during COVID is everyone got the YOLO mentality, so on the high end, you had rich people buying boats, RVs, pickup trucks, right? Yep. And so what I'm looking for here moving forward in 2022 is what I hope people start doing, what I'm positioned for investment wise, is people are going to start shifting their spending away from goods and into services. And in plain English, people are going to stop buying shit off Amazon, and they're going to start spending money at hotels, at restaurants, vacations, flights. Yeah, and I hope that they do, because that would help our supply chain issue. Because the issue with our fucking supply chain is, we outsourced everything overseas over the last fucking 30 years, and then now we're suddenly surprised that we're backed up. I mean, I could have told you, I fucking could have told you that like a while ago.
The writing's on the wall, man.
Yeah, and then same is just people are just sitting and just fucking buying too much bullshit. So
Yeah, I mean
and
that's another thing. Like, I don't know if I completely agree with the stance of like I don't think the consumer gets that much smarter with their money, but I do agree that it'll bounce back a little bit here with, like you said, travel and things like that.
yeah, I mean, never underestimate the American consumer to spend money.
Yeah.
I mean, I learned that a long time ago. I learned that a long time ago. Just, and I was always looking out for like a consumer recession, like back in 2017 when I first started. I was always like scared to buy like the cyclical stocks, like the stocks that need the economy to do well. I was always like, oh shit. I was like, should I buy software and tech, right? Because software companies don't necessarily need a roaring, a roaring situation. It's just recurring revenue. You just have to compete for market share,
Yeah,
right?
pretty easy numbers to look at.
Exactly. But I think there's a lot of opportunity in the reopening travel stocks, travel related stocks, as mass mandates are now off in LA here starting tomorrow.
Oh
Crazy.
wow. See? Who would have thought?
Yeah. I mean, I'll pull up this is a small cap growth ETF here. Get this out of the screen.
Just before we dive into even more of these charts here, like I want to be very clear again of like we're shouting from the rooftops that like inflation was alive and well and
Yeah,
ready to
I
hit
can't.
on
That
your
was
last
crazy.
episode.
Last year around March, yeah, when inflation was only coming in at like 2-3%. Um, I mean, you and I both said, I mean, this shit's going higher,
Yeah.
and a lot of it is, unfortunately, and I hate to be political, but the Biden administration came in, and then on the very first day they said we're not drilling anymore in this country. So I mean, that's not great. As people are going to start going out and hitting the road and doing shit, we're just going to stop drilling. No new permits on federal land. Um, Much tougher regulation for exploration of new reserves. Increase in the federal tax, the gas tax. And yeah, and then all of a sudden we're surprised that we're paying over $5 a gallon. I mean, and that's been a big contributor, oil and natural gas prices, and it's not going to get any better with Russia invading Ukraine now.
Yeah, exactly.
Because I mean, in 2021 we bought over 300 million barrels from Russia. We took in last year. And Russian oil and energy has not been sanctioned yet, to no surprise, because everyone still needs to buy their oil.
Yeah.
Because it's not only America that's getting the climate change,
Did
the
you see?
jazz.
I didn't read much about what the current sanctions were. I know Biden had a press conference not too long ago. Actually, it was
The
probably within the last
sanctions
couple
really,
hours.
yeah, the sanctions aren't much, to be completely honest. I mean, this is the 1 year chart of the XLE, the energy
Yeah,
ETF. So you could have owned the XLE over the last 6 months, which is done very well.
phenomenal.
Or you could have owned Facebook, so that's where the market's going right now. Right?
It doesn't seem
I-
real when you put those two charts together. Like with, I mean, like I don't know, with the
yeah,
amount of
face.
scrutiny that Facebook gets and like how big of a corporation it actually is, to see it go down to the right that much seems unbelievable.
Yeah, we can touch on that too. I mean, this right here is a big deal for the market because I mean, there is just so much money that was piled into this company, Meta. Um,
Yeah, look at
and
the
I know
top
you
out
touched.
there.
I mean, you touched on their pivot in your last video with Tucker. I mean, if you buy Facebook today and you never owned it, I think you're gonna make money. Unfortunately, a lot of people were in it right here.
Yeah, that's where they were buying.
And it wasn't just retail investors. I mean, this is pension funds, big time money managers, growth funds, value funds, balance funds, ETFs.
You name it. It's in there.
Everything. And so this move didn't really make much sense to me. Honestly, I was really surprised. I know the quarter was god awful, but I mean, the move was really crazy. And I don't own Facebook. I don't plan on ever owning it. I don't own any of the big tech companies. Really glad I don't own this. This has saved my ass. I mean,
Google and
some
Apple
of-
are the only ones that I'm like very bull on.
I mean, Google is probably the best chart in the market. Probably the best chart in the market right now. Besides, I mean, 6 months has been tough, but the 1 year is fine. I mean, you compare that to like the fact that Google and Netflix were being like compared is just appalling to me. I mean, it's not even close.
Yeah, I don't know.
I mean, the fact that they got Netflix up to almost $700 a share is just basically criminal. I don't know how this happened. And I mean, look at all this wood that's just been chopped. I mean, it's taken out everything. Like COVID happened and it just pretty much just fucking 180'd it. And now you have all these people here that are just going to be looking to get the fuck out if this thing rallies. All these people trapped in here.
Why do you think it took that big of a turn though? Like for me, I don't understand that very much because like it's still very culturally relevant. It's still like a behemoth in the space. Why is it tanking this much?
Rates going higher, honestly. Yeah, because the business has been doing fine. It's just, at a certain point, investors give you a premium, and if they don't hear what they, and if I mean, the thing with Facebook is, I mean, Netflix is, it's a great company, but should it be worth, fucking how much, where the fuck is the valuation here on this? $173 billion. I mean, that's maybe more reasonable than when it was fucking close to 7. I mean, this thing's been halved. So yeah, at one point it was worth over $300 billion. I mean, for a company that barely makes its own content, it's just tough.
Yeah, that's where they're losing a lot of money.
Yeah,
like they're spending billions of dollars a year to produce original content, so it doesn't help.
So again, if you're buying Netflix here, I mean, I think you're gonna make money because, I mean, it's already been fucking wiped out. If you're buying it, in the 600s, I mean, God bless you. But
Yeah.
if you're buying it now, I mean, I think this is somewhere. I mean, this is a big level here. The 200 mark is a huge level for Facebook because that brings it all the way back to 2018. I mean, there's so much dead money in this market now from Facebook and Netflix. I mean, dead positions. I mean, this is a dead fucking position if you're in it.
I think ethically, I'm like fully against this company, but if I want to make money on this, like piling into Facebook makes so much sense right now.
Yeah, there's a huge the financials of Facebook are incredible. I mean, 80% gross margins. I mean, very, very, very well ran company. I just
we talked about it a little bit before of like the ad business is still printing money like it's no one's business. Like once that runs out, who knows? But I think
they're pricing in like an AOL scenario for the legacy Facebook website and app, Facebook Blue Facebook. Yeah. Like pretty much by 2030, it's probably, I don't think in 10, 15 years is the legacy Blue Facebook, where is it going to be?
Yeah, who knows?
I mean, the numbers coming out from the young generation are not looking good. Even Instagram is starting to lose flair with like the young generation as well. TikTok is really eating social media's lunch right now, like at large.
It's a lot of like the content, I would say, from a personal standpoint. I know everyone's experience is probably different.
I mean, the whole social media complex. I mean, Snap, and I think Snap is probably Twitter just can't do anything. But I mean, Twitter's so weird. This thing just like spikes. Like that's not sustainable. Like this is like sometimes I'm just like looking. I'm just like it makes sense. Like, like I don't even know. It's just really weird how Twitter trades. There's a lot of Twitter bulls, and they're very frustrated. I'm not involved in any social media. I don't.
It's
Tough
impossible to
business.
pick a winner.
Yeah, it's a
It's
very
tough.
TikTok kind of came in before TikTok came in. There was a lot more transparency, but oof, now it's like. But again, I mean, if you're buying Twitter here, I mean, here look at this. Hey, this is the all chart for Twitter. So this thing IPO'd at $42. It came out at 42 back in 2013. And now we're at 30. Now we're at 35. And there are some smart people that were in that Twitter IPO.
Yeah, I was gonna
So
say not a lot of winners there.
I mean, there's a lot of dead money in this market, and that's why when I talk to people, everyone's pretty much out. Honestly, like no one's buying the call options anymore. That's dried up. The call, and if people took their money and ran, good for them. But I think there's a lot of opportunities right here, right now, though. Yeah. What else
What
has
kind
been?
of companies are you looking for? Like you said, there's a lot of opportunity out there. Like what kinds of companies now are you looking at? Because we're away from
Yeah,
social.
I like Caesars,
Another
the
big one
casino
here.
operator.
Yeah.
Yeah. So I like Caesars here. It's been a really tough year. Um, this is just a valuation thing. I mean, we're looking at a $16 billion company. Um, trailing 12 months, I mean, they're going to do about 10 to 12 billion in revenue. I mean, if Vegas does really well here and their casinos do well, I mean, they could overshoot their market cap
When did
on
you get in
sales.
this one?
Oh, I've been involved in Caesars before COVID, and then bought the shit out of it in 2020
Yeah.
here, along with MGM.
Again, yeah, those are. I don't know how many times I
MGM's
can say
chart is
this,
very,
man.
very strong
You were
chart.
very bull on a lot of these before too, and
Very, very strong. I mean, look at how this is holding with like there's no wood to chop here. And the stories here are like the best is yet to come. I mean, look at MGM. They ran this thing up to fucking $90 a share in 07, dude. So these were like the meme stocks back in the day. It's crazy, dude. I look at history, man. Like this was meme as shit. Like back in 07. Look at this.
look at the chart. Like,
I mean, imagine being like an 06, like a boomer, and MGM goes from like 35 to 90 in like a year.
just wondering what the hell's going on.
So like when you see shit like GameStop and like other shit like that going on at AMC, it's like crazy in the moment, but like there's a lot of history of shit like that happening.
Yeah, there's a lot of real world examples that have
Oh
happened.
yeah, and
Just no one pays
unfortunately,
attention
if
to it.
if you were if you were a part of this fucking pump and you're like MGM's going to 500 a share back in like 07, you're just boomering out or whatever back then.
Doing
And
whatever you
then
boomers do.
and I mean, holy shit. And I think the company's being operated very well. I like Vegas.
Really long
And
on
that's
Vegas.
pretty much it, man. I like commodities, so I like, oh geez. They're
trying to get you with the ads, man. They're trying
they're
to get
trying
you
to
right there.
they're trying to get me to
They
buy
want you. They
this,
want your money, man.
which is really good. This is tradingview.com. I like copper. This is I like commodities. That's pretty much it. I mean, I'll go over like the bad and the ugly where I lost money in 2021 as well, because I always like talking about where I lost money. I like copper. Just been buying this on dips. Freeport MacBrands is a copper miner. Newmont's a gold miner. It's been doing all right. Again, the days of just ripping returns are over. I mean, this is what you've got to really pick your spots here.
That's what it's these. That's where these TikTok gurus and everyone disappears now. Like
Oh, everyone's
once
gone.
there's blood in the water,
Everyone's
man.
gone
It's
right
tough.
now, dude. I mean, Zoom was like was the
Oh my
greatest shit
god.
ever,
Yeah,
right?
literally.
Zoom. I mean, they got this thing over 500. Fucking crazy shit, Roku.
People realize, like, go the fuck outside.
Yep, people
It's
are
a
going outside.
it's
They're
a
gonna start having
whole
fun.
world out there.
Peloton, here
So
we go. You
we
guys,
go. Here's our guy.
they actually got Peloton the 160. I was saying 120. Fucking, they got this thing to 160, man. I mean, what are
Good
you
for
gonna
people who made
do?
money on this, though, man.
You know
Like,
what
good
I've
for
been long?
you.
Actually, I've been buying Planet Fitness. I like Planet Fitness a lot. Look at this, dude. I like Planet Fitness a lot here. Very, very good business. This is a franchise model. This is a franchise model here. So it's overvalued because franchise models always trade overvalued. But every dollar they take in is pretty much, I mean, they have really good margins. It's a really good margin business.
Yeah, I still think it's going up.
I mean, yeah, it's a really cool recovery story. $7.7 billion business. I mean, a little overvalued. I don't love the valuation, but again, it's not fucking ripping. But this is one that you wanna keep your eye on. I like reopening plays pretty much. Caesars, MGM, Planet Fitness, commodities, and chips. I've been a Qualcomm
Yeah,
long for a while. Let
Qualcomm
me
Die Hard.
American Express, man, one of the best
Another big
charts in the
one's
market.
business
My
travel
this is
going
my
back up again.
second largest position, American Express. This is one I don't even worry about. Honestly, it's just, and it was funny, when people in 2020 were asking me, what do I buy, when it was going crazy? And I said, American Express. I think you should buy American Express. And they're like, what the fuck is that? And I'm just like, it's American Express. And they're like, oh, but
Again, I think it
no,
was funny.
everyone.
Like, we got together for lunch one day, and it was like during 2020, and you were telling me to buy at sub $100,
Oh, really?
and that seems insane now. Like, just to look at that
Yeah, it
chart.
is. No, I'm very surprised. And I owned American Express before COVID, and obviously I was underwater here. And thank God, you have cash, you have things, and I bought more. I bought more and I bought more. And for many months here, I mean, look, from March 2020 to October. So for 7 months, while people were parading around doing, all this
Did
crazy shit, Dogecoin, I was
just
like,
memeing
fuck.
away.
I was like, I'm not making any money on this. But all of a sudden, fucking, I
Here
don't
we
know.
go.
We had the vaccine, and then you kind of snap your fingers, value gets back in the style, rates start going higher, and I remember I said last year, American Express is a great way to play inflation, because as people start spending, when people spend money on shit and the price of that shit goes up, the merchant fees go higher. That's pretty, again, I'm pretty simple with this shit. If the notional value of shit you spend on goes higher, the merchant fees are going to go higher, because it's just a percentage of the fucking sale. So Amex is doing very well. I'm not buying it here because I was buying it 100% ago.
Yeah,
But
that's kind of where I was at. I was like, you told me to buy then. I bought then. I can't see myself buying any more
yeah,
up where it's
no,
at.
no. And because at the end of the day, I mean, God, when we were buying it, the yield, I mean, it was about a like low twos dividend yield. Now it's at 0.91 just because of the appreciation. But a dividend payer, they're buying back stock. What I've always stressed is, like, you need to invest in a business that actually feels like you're investing in a business. It's not a fucking goddamn gambling ticket. And we've touched on this Costco.
It's not going anywhere.
Yeah, so Costco, in my opinion, is the best ran business in America. And this was the first stock that I bought back in 2016. And I know I have that story. It was back in
Oh my
2013.
gosh, dude.
Yeah, we had like that stock competition senior year of high school in 2013. And it's like a fake thing, it's like, oh, pick a stock. And I picked Costco. And then when I actually had money, like 4 years later, I was like, well, I have to buy it now.
Oh, Mario, I've already won the competition within high school. I gotta go now.
I didn't actually win the competition. Like some kid that picked like some meme stock won.
Oh, of course, yeah.
Yeah.
These
It's
fucking
good
meme
stuff.
kids never lose, dude.
No, it was like it was like my friend is like, oh, I just picked like some biotech stock because like biotech used to rip like that, like hard
Oh yeah, we
back in
know,
the
dude.
day.
Theranos.
Biotech. Yeah, it was around there like 2013. That's when it was getting real hot. All that shit, genome technology, and there's gonna be
Yeah.
winners there. But again, when there's like fucking 500 characters running around saying they have the answer, I mean, you gotta fucking start looking at them with the sly eye.
Dude.
Um,
Yeah,
and
someone's
then
got to lose there.
the last large core position for me is UPS. And this is, the transports, they trade very jagged. So very, very volatile. Actually, you'd think owning
I was gonna
UPS
say.
isn't as volatile, but it's a very volatile, very cyclical. And again, it's been tough money here, but it pays a 2.97% dividend yield.
There you go. That's
So
why
yeah,
you're in.
it's tough money, but you're getting paid to own it, and it's a real company doing real things. And back in 2020, this thing was at $90, and now we're at 207. I mean,
Yeah.
it's a huge move. This isn't cryptocurrency or like a new token and shit like that. It's so like there's ways that you can make money here, but
Yeah, you don't have to bet the house and risk your MetaMask getting swiped to make money, dude.
yeah.
This is your proof. Like it's all these picks are proof of that.
Yeah. And then I mean, anything else? Let's look at one thing that's been doing well. Gold, man. Gold's
Another one that's
really, really good move to the upside. This is the Russia thing here. And this is the 5-year chart of gold. So obviously it's been tough money here for the last year. But I mean, look at this is the 1 year. It's really, is it breaking now? There's a lot, there's a lot of pressure right here at this 1900 level. I mean, this is where it really needs to do something.
Either goes up and to the right a lot more, or
Yeah,
straight down again.
Or it just chop more
Yep.
consolidation. This is gold going back to for a while. So you've had these meme spikes. Like, doesn't that look like Bitcoin?
It mirrors very similarly.
It's very, very similar, right?
People are calling Bitcoin users now like just the boomers, dude.
I know, yeah. Now it's all about like fucking monkey coin and shit,
Yeah, dude. You can't now. You're thinking you're getting the digital gold, and next thing you know, you're just a boomer like the rest of us.
Yeah. So I mean, Bitcoin has been really tough money. It's not horrible. However, I think CNBC reported that 30% of the supply is held to the loss, right? Sorry, I'm burping. That's held at a loss right now. Unfortunately, there's a lot of buying in here.
Yeah, I mean,
which is fine. I mean, I'm really coming around to Bitcoin and DeFi, and I haven't rebought Bitcoin again. Remember,
yeah,
I bought it around 17. I sold it around 50 on the first run up, and then it ran again. It ran again, but it failed at literally just, I mean, crazy, right? It just failed again. And this is rates going higher. Bitcoin trades like a saw. I mean, this looks very similar to Facebook, Netflix, right? I mean, it's almost like a 3 times levered Nasdaq play.
So are you a buyer though? Like, are you a believer in this? Like, would you ever buy at this high?
I don't think it's too. I mean, if you're buying it now, I don't think you're doing too bad. I mean, at least you weren't.
Yeah, at least you're not buying it at
here.
60s.
Yeah,
40s.
Yeah. I mean, I'm a believer here. I'm scared that Bitcoin has never had to endure a rising rate environment. This chart only goes back to 2011. Rates have been zero this entire time. Besides 2018, rates went up 1 quarter, but then Trump told Jay Powell did fucking not do that anymore, and he literally stopped. It was literally for like 2 months. Jay Powell raised rates, and Trump told him to stop.
He was like, "Yeah,
And
no,
then he
we're not
stopped.
doing this, dude."
And then COVID hit, and then we're back down to zero. And then now they're going to go higher. So that's the one thing. But I think the move today looks all right. I haven't bought it again. You know, you have to pay fees, and then Coinbase has all these, security issues and shit. And I'm just like, yeah, and then taxes. It's just like, it's just it's like go on this list, and it's like,
it's too much friction.
I get it.
Man.
Yeah, I'm just like, hey, I can buy it, and I'm not,
As a marketing guy, I know exactly where you're at. It's too much friction to buy.
Yeah, it's just about look. If when people talk to me about crypto, Bitcoin, I say, yeah, I think it's great, and I think you should buy more. I think it makes a lot of sense. I'll probably get there. Like, I'm just kind of too lazy.
Yeah, exactly.
I'm kind of just like stuck in my ways.
It's been working though, man. That's the thing. Like, it's working for you. There's
no
reason to shy away from it.
And Ethereum looks okay. Like, I believe in this shit. I get it. And maybe I'll miss it. I'll miss it again because, I had the opportunity. I started investing in 2016. I could have bought Bitcoin at 2000 and I'd be a lot richer than buying Costco or anything like that, So, yeah, I missed it. But back then, I didn't even know how to fucking buy it back then. But some people did.
That was the hard part.
Yeah, it was just like, where do I go?
It was stuck in that silo of like the developer community.
Exactly. And it's like, I'm like, I don't really know like what the hell to go on. And I'm always like a big like security guy. Like, I'm just like, I really don't like, and I'm a big like, I like to have my insurance, and you know what I mean? Like, something's behind it, and if someone takes it, they could track it, and
exactly
all that boomer shit. But I'll probably I'll probably get flamed for, but but I bought this on PayPal, and I was comfortable doing that. And I bought it because PayPal had like that no fee thing when they launched this. So then I tried it out, but then they slapped the fees back on, so I haven't done it again.
Like, get me out of there.
The fees are kind of high, and I'm not moving like fucking huge size here. Geez, exactly. I'm trying to save every way I can. But yeah, I think crypto's fine. It might go lower. I don't know, but I believe in the network.
It can go anywhere. To be honest, with you, man.
Yeah,
that's the hard part.
But hey, anything else?
No, man. Closing thoughts. I kind of want to just see.
Yeah, no,
we can touch
on. I can stop sharing, so we can stop looking at shit. Do you want me to stop?
It doesn't matter to me, man. We're just touching up on how we're looking with. Yeah, that's perfect. Just throw up this chart here, and then do we think this is going to move a ton with what's going on? I know we're not geopolitical experts, but do we have any kind of scares with the market here?
Yeah, it's pretty much where people are trying to gauge if this is going to be something that leads to bigger. Maybe does China move on Taiwan, which that would be actually a big deal. Because, that's a big deal. Russia moving on Ukraine is a big deal for energy and commodities. Russia is the gas station of the world, and Ukraine is the breadbasket of Europe. A lot of grain, a lot of fertilizer comes out of there. And then Russia, geez, they're pumping like crazy. And with gold over $1,900 an ounce and oil at 94, Putin feels very strong right now because Russia's reserves are in gold, and they fucking pump oil out of the ground like it's nobody's business.
Yep.
Yeah, but I don't think it affects like Caesars and MGM, right? Like shit like that. Like, I'm just like looking at that, and I'm just like, I don't. How does that affect what's going on here domestically?
Yeah, like those are safe ones.
I'm looking for companies that don't have to rely so much on a supply chain. Caesars and MGM don't. Maybe they have to worry about labor because there's labor shortage right now, but they don't have to worry about a supply chain. It's a fucking hotel casino. So those are the types of companies. Planet Fitness doesn't have to worry about a supply chain. And then I want to be long commodities here. And American Express, it's a merchant service. So, shit like that. But yeah, we can touch on more in another episode. I could talk more about shit that didn't work out for me too. It's great talking about shit that's going great, but
just say there's always there's horror stories everywhere. But
like cannabis really got caught up in the small cap growth sell off. as well as just legislation really in limbo right now in
That's
DC.
one with me. I made a play on um what was that? Psychedelics. Compass Pathways.
Yep.
I was a big believer in them for a while, and I got slaughtered
Yeah, I
on
did.
that one.
Yeah, exactly. You got to take your losses. Again, small cap growth, complex, pre-revenue, right? It's
It's heavy legislation that really
mhm.
relies on that, so it's tough to. I mean, you try to make a play early, it
Yeah,
didn't
no,
happen, but
what's important is zooming out and being like, is it this a Compass Pathways issue, or is it just like a broader market thing? And I would look at other kind of comps to that, which is kind of the small cap growth space at large. And there were no companies that could find bids, right? I
yeah,
mean, there was nothing. So it's not a Compass Pathways issue. It's, I mean, it's if you're investing in small kind of speculative companies that are pre-revenue, you're going to have to endure, a lot of chop. And then as
yeah.
rates go up, these things are going to go down. And there's going to be a lot of money to be made, maybe even in the Pelotons and the Rokus and the Zooms now. I mean, you just have to sift through them. I mean, Shopify is really interesting. Shopify is a great company. You guys talk about it. And I mean, look at this. I mean, holy smokes. So, I mean, maybe there's an 5 year here. I mean,
Down
maybe
real
there's
bad.
you could probably look at Shopify here. Pretty interesting opportunity, right? And I mean, you could have bought Shopify and it's a good investment, it's a good company, but it's just, you know, it's not
I'm
what's
s-
working right now.
I think I'm very torn on Shopify. This is like, I know we're getting out of the weeds of closing thoughts here, but I think Shopify is a very interesting company that relies very heavily on another company, which is Meta. So it's
Yeah, with the ads.
yeah. So
Yeah, small business, Meta drives small business to them. And then as Facebook starts to roll out their marketplace and the Instagram marketplace, that makes a lot of sense.
yeah, so I'm not sure. I don't know, like you said, great company, but I'm not sure I'm super long on them.
Yes, exactly. Yeah, and that's probably what the market's sniffing out right now too. I mean, this thing's went from 1,700 to 600 in the span of like 2 months. It's brutal out there. There's a lot of pain. There was a
Oh,
lot of pain.
you said there's
And
blood on the streets, man.
there's a lot of opportunity. I think it's if for people that got discouraged, I mean, try to rebound and get some cash and try to sift through. And I think there's some good bargains out there.
I do not doubt that at all.
Yeah.
All right, man. We'll
Well,
wrap
it's
this
good to
up
be
here.
back. Yeah.
Like I said, you will be back on
Oh
again very
yeah,
soon
just
with what's
whenever.
going on
Yeah.
here.
Of course. Yeah.
So
Still a lot to talk about and catch up on, but we only have so much time. Can't just sit here for 6 hours.
wish with our job, but it sadly is not.
Yeah.
Uh,
Until maybe if you guys blow us up, then I can do this all day.
exactly. See, once the listeners and viewers blow us up here, I'll be sitting in front of charts all day.
Yeah. Let's do this every day for you guys if you blow me up. All right, here we go. It's always a pleasure, man. Always love to do this.
Of course, man. Always great to have you.
Take
All
it
right,
easy,
guys,
my
man.
man.
It's
See ya.
been outside the lines. Again, not sure what episode this is. We just keep flowing through these things, but
We just do it, man. Tell me right now, like, what better content is there than this right here?
it's see the viewers cannot.
I
All right.
honestly like it. Well, we'll talk about it later. See ya, man. Have a good one, man.
All right, guys. And that wraps today's episode. That was the legend Jamie Bell. Again, we covered a ton of what was going on in the market, the current situation going on with the geopolitical issues that we're currently engaged in, and just overall stocks, what kind of wins you're going to be having, what kind of losses you're going to be having, because you will take losses. It is part of the game. But yeah. All right, guys. It's been outside the lines. We'll talk to you guys soon. See ya.